With the housing market slowing down, we're seeing more buyers receive seller credit, aka seller concession, in their purchase contract. But contrary to belief, there is a limit to how much seller credit you can receive and use towards your closing costs. A lot of buyers and some realtors don't know this, so here's the answer. The max seller credit you can use towards your closing costs depends on your loan program. So here are the max percentages based on the mortgage loan program. For an FHA loan, regardless of the down payment, the max seller credit you can receive is up to 6% of the purchase price. For a VA loan, regardless of the down payment amount, the max seller credit you can receive is up to 4% of the purchase price. For a USDA loan, the max seller credit is 6% of the purchase price, regardless of the down payment amount. Now, the max seller credit for a conventional loan depends on the amount of down payment you bring. Oh, and by the way, I forgot, leave a comment below if you want me to connect you with a trusted real estate agent in your area. Also, be sure to subscribe for more insider mortgage content. There's a lot of other educational insider videos on my channel. For down payments up to 10%, the max seller credit allowed is 3% of the purchase price. For down payments from 10% to 25%, the max seller credit is 6% of the purchase price. For a down payment more than 25%, the max seller credit allowed is 9% of the purchase price. Now, separately, for investment properties, the maximum seller credit allowed is 2% of the purchase price. Lastly, what closing costs do the seller credits cover? The seller may be able to cover part or all of the following closing costs through the seller credit. First, prepaid property taxes through the end of the year at closing. Number 2, title insurance. This is used to protect you and the lender if someone comes with a claim for the home's title, typically if the title was previously not recorded correctly. 3, loan origination fees. These fees cover the lender charges for processing your loan application. And 4, inspection fees. Some states on some loans require pest inspectors to evaluate the property before the sale can be completed. 5, recording fees cover the expense of recording your home's purchase with the local government. 6, appraisal fees. This is the fee, which is the cost to obtain a third-party appraisal company to determine the market value of your home. And 7, attorney fees. In some states, a real estate attorney is required to review the closing documents. And 8, mortgage points. This is also known as discount points and is an upfront interest you pay to reduce your interest rate. The best way to negotiate the seller credit is to first work with your lender to obtain a loan estimate, and then you can review the estimated closing costs with your real estate agent and decide which ones to negotiate for the seller to pay. I hope you got some value from this video, and if you did, be sure to check out some of my other videos on YouTube listed below, and there you'll find more mortgage tips and advice, as well as many other resources to help you through your journey. If you have any questions, just shoot me a text at 240-292-1663 or send me an email at chris@onerate.com, and my team and I will be happy to help. Thanks again for watching. Have a great day.